hello and welcome to Business Mornings, the Thursday trade right here in Lagos, Nigeria. Still been mostly negative this week for the local bourse, but we'll see if we'll get some kind of change today. But let's get a quick check now on what's playing out with oil prices. We see they slipped in Asian trade today after official data showed a much larger than expected build in U.S. crude stocks. And we're seeing the impact there. Brent crude, not much change though compared to tracking the price yesterday. I've not seen much change, but it's down 0.3% this morning. WTI is still at $58.44 a barrel, sub 60, 0.40% down. That's it there. I'll give you more updates later on the show. What's driving sentiments right there in the oil market? Let's get a check now on the local bourse. See, Nigeria's equities market retreated yesterday as renewed sell-offs in heavyweight counters that erased about 444 billion naira from the NGX market capitalization. A sharp decline in Boa Cement, which fell about 4.76%, alongside steep losses in Cadbury, Mayer. That dragged the oil share index lower by 0.48%. Then there you have it, 444 wiped off. We see volume value deals in the green, showing that sell pressure came from most of the investors at this time. Then we see the downturn just a day after the market snapped a 6-day losing streak with 94 billion naira rebound. That was on Tuesday. But despite the negative close, investor sentiment was slightly positive as 29 gainers outpaced 27 losers, signaling pockets of resilience across select mid-cap and consumer goods stocks there. So you see the top gainers now for yesterday. ICO up about 10%. The big losers there, front running that, we see Learn Africa, 5 naira 22 kobo, down about 10% yesterday. All right, let's get a check on all the stories now. The oil and gas industry. NNPC has energy. They say they've achieved a boost to Nigeria's energy security with the addition of 135 million standard cubic feet per day, adding that to the domestic gas supply, according to a statement released by the head corporate communications at Harris Energy. The milestone, which is the first of its kind in the country, was recorded through the innovative rigless recompletion of a key non-associated gas well in OML 17. They're one of the big stories in the oil and gas industry yesterday. Then we also see now, talking about funding, the board of directors of the African Development Bank Group, they've approved a $500 million loan to Nigeria to finance the second phase of the Economic Governance and Energy Transition Support Program. In a statement released, the AFDB says the loan aims to help the government tackle energy poverty, climate change, and also meet the Sustainable Development Goal by 2030 and net zero by 2060. All right, let's look at the macros now. Money supply, we see that expanded again in October, according to the Central Bank of Nigeria, reversing last month's slowdown and signaling a fresh build-up in liquidity across the financial system. New figures from the central bank showed a broad money supply that rose about to 119.04 trillion naira, up by 1.25 trillion naira, about 1% from September. On a year-on-year basis, money supply grew by 11.04 trillion, representing a 10.22% increase there. So according to data from the CBN, monthly change there, that was 1.25 trillion added, 1.06%. And definitely we know how that plays into, inflation. The rise comes 1 month after the Monetary Policy Committee delivered its first rate cut in 5 years, reducing the MPR to 27%. As inflation began to ease and foreign exchange conditions improved. So definitely we're still seeing that rise there. Then would obviously see how the CBN mops up some of that excess liquidity. All right, we'll see the Securities and Exchange Commission. They've issued a directive requiring all capital market operators, CMOs, to declare their level of compliance with the Investments and Securities Act, ISA 2025, and ensure that tradable instruments in their portfolios are fully registered by January 2026. The announcement was delivered by the SEC Director General, Dr. Momatimi Agama, through the Commissioner of Operations, Bola Jamale, during the 2025 Journalists Academy held in Lagos yesterday. So that's the deadline there. We have so many deadlines coming up at this point in the capital market. November 28, T+2, that's coming up. We'll definitely be tracking how that plays out. The first trade under T+2, meaning that when you make a transaction in the capital market, it'll take about 2 days, 2 working days to complete that transaction. All right, to other matters now. The 2025 Africa Investment Forum, that's started in Rabat, the capital of Morocco. This year's theme is bridging the gap, mobilizing private capital to unlock Africa's full potential, with a focus on the required estimated $130 to $170 billion annually for infrastructure. Our business editor, John McQuash, is on ground there. She reports.
The Africa Investment Forum has been described as a multi-partner investment platform for Africans to garner capital, especially from the private sector, and work with it. So, though it was launched in 2018 and has already capitalized about $22 billion in investment, the organizers, chief of which is the African Development Bank Group, say that there's still a whole lot of ground to cover, and that's why for 2025 they're looking further into how they can get private investment and private capital for the development of the continent. Strategies and steps for bolder and more deliberate use of Africa's capital take center stage as the market days officially open.
The Africa Investment Forum is a platform where the 4 cardinal points converge toward a single objective: action. As we gather in the boardrooms with projects covering transport and energy among other sectors, let us remember that this is about much more than transactions. It is about investment for our people, for our economic prosperity, and for our shared future.
And for all of the 3 days of the market days, topics such as accelerating private investment through conducive enabling environment, investing in resilient energy solutions, unlocking the path to scalable private investment in Africa will be on the table. John McQuash reporting for Channels Television News.
I will be getting more updates from Ini right there in Rabat, Morocco. All right, to some company news now. The 11th edition of the Maltina Teacher of the Year Awards has crowned who has been described as Nigeria's most outstanding educator in 2025 at a grand awards ceremony in Lagos State, southwest Nigeria. The event, hosted by Nigerian Breweries PLC, celebrates teachers making real impact in communities across the country. Our next report has more.
Suspense culminates in celebration at the grand finale of the 11th edition of the Maltina Teacher of the Year Awards, hosted by Nigerian Breweries PLC. The event recognizes educators making outstanding impacts across Nigeria, with the coveted Teacher of the Year Award, which comes with a whopping 10 million naira prize.
If we collaborate and support with teachers, knowledge multiplies. Collaboration turns passion into progress.
The night opens with a keynote address from Ayomide Avuse, an 11-year-old beneficiary of Slum to School Africa, who advocates for greater support and investment in education.
And I will say again, I am a beneficiary of Slum to School Africa, an organization that has supported thousands of children like me to believe in themselves.
I'd like to announce out the top 3 in no particular order.
Then 10 finalists are narrowed down to the top 2 on stage before Yusuf Serra, an English literature teacher at Wisdom International School of Excellence, Abuja, is announced as the 2025 Maltina Teacher of the Year. She dedicates the win to underprivileged children in underserved communities, underscoring her commitment to education and social impact.
I'm going to use this platform, this opportunity, this award to empower more students, to empower more children that are within the low-income community. And I believe that with one child, one teacher, and one community, we are reaching the ends of the earth, transforming the slum stories into global success.
Following the announcement, brand executives and partners emphasized that the initiative is rooted in a commitment to national development and a determination to drive positive change beyond business interests.
If we had to choose something I think natural choice would be education, because this is where everything starts, by raising our children. We had a beautiful speech this evening of a young boy, 11 years old, telling us, what it brought to him and how it brings new perspective to him. So I think this means a lot for us. This is what initiated everything.
You can always expect not only us having to reward our teachers in an extraordinary way, like we have demonstrated today, but also to support even in the schools where these teachers emerge from, in terms of providing them with infrastructure and also ensuring that the learning environments in our schools are very conducive for our young ones.
While the saying goes that the reward for educators is in the impact they make, this event formally and fittingly recognizes and celebrates their contributions to the nation's future.
And now to our first conversation. We examine Nigeria's pharmaceutical landscape at a critical moment for the economy, with insecurity disrupting supply chains. The naira, still cheap compared to the dollar, and healthcare needs rising. The push for local drug manufacturing has never been more urgent. NIMET's latest earnings report shows strong momentum, but the big question remains: can Nigeria build a resilient pharma industry that delivers essential medicines, reduces import dependence, and serves, rural communities? We break down the economics, the policy gaps, and the opportunities shaping the future of drug production in Nigeria. Joining me now for this conversation, we have Mr. Valentine Okelu, MD CEO, is NIMET International PLC, listed on Nigeria's stock market with a market capitalization of about 23 billion naira. Thank you so much for joining us on the show today, sir.
Thank you very much, Ladi, for having me. Yeah.
Fantastic. And, fun fact, there's a lot of traffic coming to the studio, and Mr. Okelu had to make a huge sacrifice to get here, to beat the traffic on Kara Bridge. Thank you so much, for making it today, sir.
You're welcome.
All right, so, definitely we've been talking a lot about, there's a push now, for local manufacturing of, drugs. Ever since the naira, weakened a lot, we've had that pressure, because we import a lot of, this essential medicines, at this point. Talk to me about what you're seeing, when it comes to the prospects for Nigeria, being that pharmaceutical production hub. I'm seeing in South Africa, news coming out from there. They've been able to produce their homegrown, what's it called? The one that's used to, fight away viruses.
Okay. HIV?
Yes, a vaccine.
Viral,
a vaccine, yes, in South Africa. That's huge,
Yeah.
at this point. What are you seeing so far?
Okay, so like you said, there's a very, very clear renewed push, which is very, very welcome for local manufacturing of pharmaceutical products in Nigeria. And it's very, very important, at this time. I mean, it's good. Sometimes bad events trigger good outcomes. I think after the COVID and then more recently the Forex issues that the country had, this renewed push for local manufacturing of medications gained traction. Now, it's important to understand that it's not just about securing supply chains, for medical products. It's also about securing the health of Nigerians generally. It's also about increasing and developing the industrial base of the country. Because, when you're developing a particular segment, there are also some subsidiary sub-segments that would support those main targeted industries that you're trying to promote. So apart from securing the health of Nigerians, there's also the issue of industrialization and most importantly, creating the required job for Nigerians. If you look at the trend, this push for local manufacturing at some point also gathered momentum like we're seeing now. But you also realize that if you go back to the trend, there was a time there were a lot of policies on prohibiting the import of beta lactams and all that. And manufacturers, pharma manufacturers, invested heavily in beta lactam plants. Now, over a period, within a couple of years, that policy was reversed. So most of the investment in that those facilities were like wastes. So the important thing this time is to be consistent, is to ensure that what is seen now as the new push is sustained.
In your opinion, what conditions, do you think we need to encourage, at this point to actually, make us one of the top hubs for pharmaceutical production?
Okay, so what I would like to approach this from the point of view of what are the pains, what are the factors militating against Nigeria having achieved that in the first place. The first one, which is very critical, and I almost talked about it in the intro, is fiscal support, regulatory support, government backing. There has to be a very clear strategy, long-term strategy, not short-term strategy for this to happen. I'll give you an example. Let's take India as a model. India in the 90s passed a law, they called it Indian Patent Law, which clearly encouraged Indian pharma companies to develop their own version of original brands of pharmaceutical products by going through different processes. In patent, you have to state all the steps you took to get to the final products. So the Indian government was very, very vehement in refusing to budge to pressures not to continue with that policy or to continue with that law. And they ran it for almost 20 years. What happened was that it gave the Indian companies the opportunity to develop products, have experience, scaled, and then were ready to face the world. So that gives you an idea of the impact of government policies. And I wouldn't call it just protection, sector protection, but it's not really about protection, but it's really about ensuring some kind of fair play. So that's one. The second one is access to finance. Pharma manufacturing is not just capital intensive. Apart from being capital intensive, it requires patient capital. I'll give you an example. If, Ladi, you have 50 billion naira to invest today, if you take it straight to the stock market, you're going to earn some dividend instantly, right? If you also take it to the banks, put it in fixed deposit, you could earn as much as 15%, right? Instantly. And then if you also decide that you take it even to bond, there are so many other places you can invest your 50 billion. If you invest it in starting off a pharma manufacturing plant, you're going to wait for a minimum of 2 to 3 years before you even start production.
Before production?
Before production, yes. Now, if you have to wait for 2 to 3 years, I'm not sure how many investors with 50 billion would want to go and put it and wait. So that's why we keep talking about having the appropriate funding to encourage the sector, to scale.
Right. So that's so much to unpack there, and it seems patient capital is needed right now in so many industries, but it seems for pharma, we need really, really patient capital. From what you said so far, and we've seen the federal government make some moves. At this time, Nigeria and Brazil signed an MOU to boost local pharmaceutical manufacturing, and we see the minister there, Mabe Pate, actually speaking. Let's take a listen quickly now.
Was focused on investing in healthcare, but given the state of our economy, that investment clearly will take time before we get the resources that we can provide, like NHS in the UK. So when private actors like you step in, you're really extending your hands, joining to build the health system that we want in this country. So we must appreciate you very deeply.
All right, so we see partnerships happening. Yeah, this is country to country at this point. So in your view, are you optimistic about this kind of partnerships?
Well, I wouldn't say I'm particularly optimistic. I would say I'll be cautious The first rule or the first thing I always ask people is there anyone that would love you more than he loves himself? That's the first question. There are partnerships, but when you're going into partnership, each party to the partnership has its own interest, overriding interest, right? But when the interests align, then the outcome will be good. However, the scale of what needs to be done in the pharma segment of Nigeria is not something you're going to rely on another country to push. There really has to be a consistent, wide policy. In fact, let me even come to the issue of assistance, grants, aids, from countries and multilateral agencies. Like I said, when people come to you to help you, they also have at the back of their mind what they stand to do.
They have interest.
Good, they have interest. Right. Now, what I would suggest is that as a country, Nigeria needs to develop a shopping list of what our needs are. In what areas do we have need? Have it articulated, have the shopping list available, and then let any partner or any country that wants to assist plug directly into that arrangement. Now, what it helps us to do is that it will reduce the incidence. And for instance, you heard about Brazil. Recently, there was an initiative from the European Union, and we've seen a whole lot. There are a whole lot going on in the area of training, in the area of helping with WHO pre-qualification. But you find repetition in a lot of these initiatives. So it's important that as a country, we have a bucket of what we need and what will be required of any a country or agency or any entity that wants to assist. What you have today is that you have a whole lot of people playing in a particular area that may not be as impactful as what the other area would have been. So you have too much effort, too many things going on, but in a little space that wouldn't give you much impact. Then you have too little going on in the big area that will give you the big impact. So what I'm suggesting is we have our list of requirements, and then when assistance comes, it has to plug into that list.
Right, so like a blueprint, you know, at this point. But, you know, before we go any further now, definitely there's a business side, you know, to pharmaceutical production, and definitely you did release your Q3 earnings recently, and we see there was a jump there in revenue. There was, you know, about 5 billion in turnover. That's for Q3, you know, 2025. So it seems business is good, you know, at this point, looking at that turnover revenue. Q3, 5 billion, up from 3.09 billion in Q3 2024. That's 62% up year-on-year. Profitability metrics, you see gross profit there, 2.49 billion, up 71% year-on-year. For your bottom line, we've seen net profit, that was up about 9%. Earnings per share, that's at 7 naira 95 kobo. So, you know, on the surface, it looks good. But I'd like to ask you, how's business really?
Well, business is good.
Right.
But it's also tough, right? So I'm saying business is good because we are looking at the future, we are looking at the potential, we are looking at the plans we have and how everything is panning out. But whether it's tough because it's still doing business in Nigeria, right? Good. So
because I remember last year, year before that, it was all about the Forex losses, you know, for the major companies. But I think that's a different picture now.
Yeah, okay.
With stability of the Naira.
Good. So not just the stability of the Naira, but let me just give you a little idea of what we've done. The first thing we did was to try to remove the bottlenecks, supply bottlenecks that we had, you know, in getting products out there in the market. So we carefully looked at what the issues are and tried to remove those supply chain bottlenecks. We also carefully, the key word here is carefully, looked at the portfolio, right? And we asked ourselves, can we do everything at the same time? 30 products, do we have the resources? Do we have, which products are the ones that we're likely going to focus on that has good demand, has good, what's called now, good margins that could now propel the company so that we'll be able to develop the rest, right? So that's the first thing we did. Very importantly, we also curated very clear marketing strategy that targeted the correct segment, and we made sure that we served them well. So that's how we're able to generate the result you've seen. We also were very, very careful in managing our cash flow. We focused on our route to market. You know, our distributor engagement was top notch, and that's what you've seen the results.
Right.
Yeah.
All right. So definitely investors they love to look at most of these earnings to get some kind of foresight on what's going to happen with the company. But in your opinion, do you think companies like you are out of the woods? When it comes to currency fluctuation and inflation, and definitely cost of living crisis. Right now, there's also that talk about some very important medicines. Right now that mostly imported, not getting into the country, like blood pressure medication, diabetes. Can we really feed ourselves with these medicines, in your opinion? Can we locally produce them? Because most of them are out of the market now. Most of these companies have left the country. What do you think?
Okay, so let me start from the basic medicines. I can assure you that Nigerian pharma manufacturing companies can take care of our basic medicines. I'll give you recent data. A lot of manufacturing companies in Nigeria today are producing at less than their installed capacity. That's one. Two is that if you look at data even coming from NAFDAC, before now, the ratio of imported products to locally produced products in Nigeria, satisfying Nigeria medical need, was 70% to 30%. So we produce only 30% with 70%. Why? You may ask, even when we have a low utilization of installed capacity. Basically, it's because there's unfair advantage, for products that were produced outside the country. It's not really about protecting a particular sector. It's about ensuring compliance and fair play. I'll give you a little example. An Indian manufacturer today receives incentive for producing. If you look at it really, it's as if you're discounting the products even before the manufacturer ships. And these products will come to Nigeria and compete with that produced by a Nigerian manufacturer that has generated this power, generated this the water he used to produce, took care of his security, and actually managed most of the infrastructure, right? So it's not really about protection, but about having a kind of level playing ground. So the key thing here is to have a deliberate policy. For instance, we have local content policy in Nigeria, which naturally would mean that for government agencies and organizations and hospitals to purchase medicines, they need to buy more of the locally made products. But how many times has the owners of the policy checked to see what's going on? If that's going on, you remember, your cost of production, apart from what I've just talked about, is also related to the volumes you produce. The higher the volume, the lower your cost per unit. And that's what the Chinese and Indian companies are using to route the...
Because a manufacturer I spoke to here did talk about the cost of power in Nigeria, compared to the cost of power in China.
Yeah.
Nigeria is 2x.
Okay, yeah.
That cost, and many other costs that you also mentioned.
Yeah.
So I guess the big question is, how do we bring down all of this cost to allow the Nigerian manufacturer compete?
Okay, so there are things that have been done elsewhere. You remember, nothing is entirely new on planet anymore. If you have a challenge, all you need to do is to look at who else has had that challenge before and then see what the person did and see how you can adapt his own solutions. Let's look at India. I just talked about their patent laws and all that. When they did that, they didn't stop there. They had a series of initiatives. The next initiative they took, because they were having the same challenge we are currently having, is to set up pharma manufacturing parks, right? Which were areas dedicated to pharma manufacturing. So the common facilities that are needed for manufacturing pharmaceutical products were provided. So when you have, when you share your cost, you now find out that suddenly what was big will now become a very little fraction of what it used to be. So when you have 10 pharma companies in the same location, sharing security costs, sharing energy costs, sharing all those kind of heavy costs, the cost of production comes down. So I'm referring to that model that has already been done. What we have also seen in Nigeria is that that initiative is coming up, but it's coming up in a very splintered manner. Every state, or well, a lot of states in Nigeria are now talking about pharma manufacturing parks. At the last count, I've counted 5. Now, that is again doing too little to solve a big problem. There should be a national policy on this. There should be a national coordination, because the resources available at the state level is not the same as what it is at the federal level. And if resources are pulled together, you have much more impact, right? So that should be coordinated at the national level, because you also see that the governor that initiated this industrial park initiative, when he leaves the office, his predecessor may not really be interested. So what then happens? Then the companies, the pharma companies that have signed on to these parks will be left out in the cold. So that's so
I guess we'll have to make it law.
Yes.
At this point. So even if another administration comes in, they have to follow.
Oh yeah.
That blueprint.
Yes.
All right. Definitely.
That's why I also talked about national. Making it a national policy. Yeah.
Right. All right. So at this point, we also when we look at the urban side of things, we should also worry about the rural parts. And when we're seeing high costs of medicines, the urban parts, I can imagine how high it would be, or even if it's available, in the rural sides. What conversations are you having about that?
Okay, yeah. So basically, let me also say that it's not really about giving the rural parts preferential treatment. Our focus is in ensuring that our products are available everywhere they are needed. So what we do is to track demand, right, and follow the demand for the product, arrange our supply chain in such a manner that wherever these products are needed, they are available. And we've gone into supply distribution agreements with 2-3 big pharma distribution companies, and they are doing very well in that respect. The key thing that we keep talking about is how to scale up. How do we have the opportunity of ensuring that we have enough resources to even do more, not just tracking demand? Because the population is increasing. We have a very massive population in Nigeria. The demand is rising, the lifestyle is changing, and as the lifestyle is changing, the incidence of chronic diseases like diabetes, hypertension would also increase, right? So that means as we go forward, both in the rural and in the urban centers, you're going to have surge in demand of pharma products. What strategy, what policies, what initiatives do we have in place, both from the government, from the investing public, the pharma companies themselves, to ensure that we take care of this need? There's something I want to also talk about. We have a huge opportunity in Nigeria as pharma manufacturers, as a country, that we're not thinking about. Studies and publications on going global, because it's not, we're just talking about satisfying local need now. That's not the key, the big thing. The big thing is in the pharma companies in Nigeria being able to go regional, being able to go global, right? Because when you're satisfying your local market, you tend to sharpen up your experience, your expertise, and then be able to put yourself in a position to go regional, go global, right? That is where we are supposed to be thinking about. And the advantage Nigeria has is that with our population, we have enough market to do all those. Research and publications have shown that companies that do well globally, first of all, do well locally. You don't have American companies. You won't have an American company that started in Nigeria and is doing very well and then is going back to the US. That puts Nigeria in a special place. There are few African countries that have that opportunity. As I speak to you, you'll see the development of manufacturing plants around Nigeria, but not in Nigeria. You know why? They're all targeting Nigeria's huge market because of AFTA.
But you don't want to produce in Nigeria?
Yes. And I'm sure you know the reason. The cost of producing in Nigeria is far higher because of the infrastructural deficit we all know about. But the Nigerian manufacturers are Nigerians. We're not going to start running to Ghana or to Benin Republic to go and start producing. We stay patriotic, we bear the cost, but it comes at a huge cost also, and it costs us when it comes to competition. Yeah.
All right, I'll say thank you to you, manufacturers that stay and battle it out and produce in Nigeria and still, cater to this market. Yeah. Thank you so much. It was great having this conversation with you, sir. Yeah. Mr. Valentine Okelu, who's the MD CEO, Nimeth International PLC. Thank you for coming on the show today, sir.
Thank you very much. Thank you.
All right, we'll take a break now. The Nigerian British Chamber of Commerce, they've inaugurated its 19th president, Prince Abimbola Olasore, at the ceremony attended by top government officials, business leaders and diplomats. Speakers at the event emphasized the growing role of trade and diplomacy in driving national development. Former Minister Babatunde Fashola highlighted the importance of collaboration, while Lagos State Deputy Governor Dr. Obafemi Hamzat underlined the shared commitment between Nigeria and the UK to innovation and economic growth. Take a listen.
The Nigerian British Chamber of Commerce has inaugurated its 19th president, Prince Abimbola Olasore, at a ceremony attended by top government officials, business leaders, and diplomats.
Your Excellency.
Thank you very much. Former Minister of Power, Works and Housing Babatunde Fashola highlights the growing importance of trade and diplomacy as engines of national development.
What could possibly limit our capacity to trade with one another today in a world that has globalized, in a world that has digitized? It is only ourselves who can limit ourselves.
Representing the Lagos State Governor, his deputy, Obafemi Hamzat, said Nigeria and the UK share not only historical ties, but a strong commitment to innovation and economic growth.
Over the decades, Nigeria and the United Kingdom have built a partnership that is rich in history, yet firmly anchored in ambition. We are bound not only by shared past, but by a mutual desire for innovation, growth, and sustainable prosperity.
British Deputy High Commissioner Johnny Baxter explains how the UK's developing countries trading scheme now allows over 90% of products from eligible markets to enter duty-free, strengthening bilateral trade opportunities.
Also worth underlining the partnership between our two countries, the Enhanced Trade and Investment Partnership, whose purpose is to identify those barriers to trade between our two countries, and for our two countries, our two governments, to work together to resolve those barriers.
The guest speaker, former president of Afrexim Bank, Professor Benedict Orama, urges African leaders to take bold decisions as the world's deglobalization trends reshape trade dynamics.
Our world is today in a state of entropy, powered by rapid deglobalization, geopolitical tensions, and economic nationalism that are disrupting supply chains and upending the systems that have supported trade and investments globally.
The events culminates in the formal inauguration and decoration of Prince Abimbola Lasore as the 19th President and Chairman of the Council of the Nigerian British Chamber of Commerce.
We would have executed the mandate of our king.
Tonight is not just about an inauguration. It's about continuity, transformation, and renewed commitment to the vision of strengthening Nigeria-UK trade for the prosperity of our business community and indeed our nation.
With his inauguration, Prince Abimbola Lasore takes on the mandate to deepen Nigeria-UK commercial ties, strengthen the Chamber's influence, and drive new partnership for investment and trade.
All right, let's get a check on what's playing out in the commodities market now. Dumebi Oluwole joins us. Great to have you, Dumebi. Good morning. Yes, so we have the final decision. That's for the interest rate decision for the year. And there was a whole decision. Let's circle back on that quickly. How surprised were you?
Well, I wasn't, actually. Remember on Tuesday, when we spoke, I did mention that I expected that the central bank will be very cautious, even if they did decide to even reduce interest rates. So the whole decision wasn't surprising to me. It was very much, in fact, a part of the play that I did expect. As a matter of fact, in my analysis, if they were going to cut rates, it would have been between 25 basis points to 50 basis points. Which would have still been very, very cautious. So, no, I wasn't surprised about the decision.
So, how would you describe this decision? Would you say it was hawkish or dovish hawkish?
I mean, I think I'll just leave it at it being a cautious decision. Not necessarily hawkish, because they're not increasing interest rates, and not necessarily dovish because the decline in interest or the rate reduction has only happened once. What this tells us actually is that they're signaling to the broader investment climate that interest rates will still remain elevated, and this is expected to, number one, continue to prop up investments towards short-term securities. We've seen FPI inflows more than triple, at least in the last 2 years, if not 1 year, and we expect that trend to continue just based off of this decision that the MPC took. More importantly, it's to reinforce the disinflation path, right? We have seen inflation significantly decline. But as I mentioned on Tuesday, the decline has been primarily driven by base effects. And we are still seeing insecurity, significantly impact food production hotspots that tell us that food inflation could likely reverse the downward trend in the near term. And this decision is trying to get ahead of that to, number one, anchor inflation expectations, number two, anchor exchange rate expectations, and number three, reinforce the disinflation path. I will say the final thing on this is, of course, the decision in September, if you remember, not only came with a decline in interest rates, but also a decline in the CRR. And what this does with the November interest rate decision, which has kept the MPR stable, is that we will still likely see that CRR kind of support the interest rates remaining stable. And what that means is that market liquidity will still be very much in play here, and with market liquidity in play, it means that commercial banks still have access to cash to disburse, to lend out to people. So meaning that there will still be credit access, just that lending rates would not decline.
All right, so I guess maybe we'll just agree on dovish hawkish at this point.
Yeah,
we have to agree on something. Dovish hawkish.
Yes.
All right.
Hawkish.
Let's look at money supply now. We have data for that increased by 10.2% to 119 trillion. That's for October. How are you seeing that?
I will say with the fact that CRR was reduced, this was very much expected. If you break down the numbers, you see that market liquidity is really what is driving the increase in money supply. Cash in circulation as well has also, we also see an uptick in there, and that's one of the reasons why money supply growth is increasing. But we do expect that the central bank will try to contain this level of increase. Remember that we're coming from a world where money supply had significantly increased by over 50%, almost even over 70%, right? And what we're seeing now is not necessarily up to that amount, but we do expect that the central bank would work towards containing the increase in money supply, just so that the theoretical part of inflation, where we have too much money chasing too few goods, is contained, and we don't see inflation significantly increase, or at least being driven by money supply factors.
All right, let's pivot to the oil market now. We're still seeing that range trade and a lot of geopolitics driving sentiment here. But how likely is, a potential Ukraine-Russia ceasefire? That's supposed to ease Western sanctions on Russia, and then we get Russian oil, back in the market. What could this mean for global crude prices? Definitely we hope for peace, at this point.
Yes, we do hope for peace. I will say that the peace deal, it might take some time, or it definitely will take some time before we see that agreement, because right now all stakeholders have their, interests at play here. There was a reversal on the initial 28-point, deal that was proposed by Trump, and that is coming from European leaders, and the conversation around that being changed and how Moscow is taking it is definitely one to watch out for. And basically what this tells us is that the peace deal will take some time before all parties feel happy about the compromise that they will have to make. But what we are seeing definitely is that if this deal pulls through, oil prices would likely fall, because there will be an increase in oil supply. It might be gradual, but the decline in oil prices is almost looking very much in sight. We are already seeing crude oil futures decline, and that obviously tells us what future price and what market sentiments are beginning to anticipate or expect to happen. And if future prices are already falling, it means that not long after, spot prices will follow suit. And if oil prices decline, what that means for Nigeria, of course, is a potential decline in oil revenue. But I will give this caveat that an increase in oil production for Nigeria is much more important, because if we increase our oil production to meet the corresponding oil price, we would likely see the increase in oil production cushion the impact of lower oil prices. But then again, this points to the fact that oil production has to significantly increase. We haven't seen oil production we haven't seen crude oil prices plus condensate, hit that 2 million barrel mark that that the fiscal budget is working with. And I'm sure that going to 2026, there are expectations for an increase even beyond the 2 million barrel per day, mark. And if we're unable to hit that, then of course it's a very, very big issue, a big challenge if oil prices significantly fall. And right now it's looking like oil prices will retain that trend below $60 per barrel.
All right, thank you so much, Dumebi. We'll keep tracking those prices. Not much has changed this week, though, but we see WTI there still sub $60. Thank you so much for joining us today.
Thank you for having me.
All right, in a major push for intra-Africa industrialization and trade, Nigeria and Kenya formally committed to developing cross-border production networks and industrial corridors. Industry stakeholders announced the first ever Kenya-Nigeria Trade and Investment Conference. The event, organized by the Lagos Chamber of Commerce and Industry in collaboration with the Kenyan Association of Manufacturers, that's CAM, that held under the theme, Advancing Intra-African Trade and Industrial Partnerships under the African Continental Free Trade Area. According to Mr. Gabriel Dahosa, the president of the Lagos Chamber of Commerce and Industry, says the Kenya-Nigeria Trade and Investment Conference marks a major step towards deepening intra-African trade under AFCFTA. Take a listen.
Our two countries have immense opportunities. We are both countries key players within the continent and even globally, and we have a lot in common that we can share, including products and services. And we have similar challenges that we must resolve through increasing our bilateral trade. So the essence of this gathering today is just to share thoughts on how on opportunities that exist between the two countries for both trade and investment, and create connection within our private sector so that we can leverage those networks to improve trade, which currently is not as pleasing as it should be. There is room for improvement. We need to work out on the barriers that exist that hinder the trade and investment between our two countries, build trust between various partners, stakeholders, and also through government engagements, reduce certain barriers.
We looked at Nigeria as one of the biggest economies in Africa. Like I said earlier, it's the fourth largest economy in Africa, contributing about 9% of the total GDP in Africa. The population also is quite attractive to the total African population. And to us, that's a good market for Kenyans to consider working with them. And looking at the fact that there's the Africa Continental Free Trade Area, a big ambition to integrate Africa. So as Kenyans, we realize we have not done much in Nigeria. And if we want to really integrate, we start with Nigeria so that we can open up the West African market and begin to feel the benefits of the African integration.
All right, let's get a check on what's playing out in the global space now. We see President Donald Trump has announced that South Africa will not receive an invitation to the 2026 G20 summit scheduled to be held in Miami, Florida. In a post on Truth Social, Trump stated that the United States did not attend the recent G20 meeting in South Africa due to what he described as the South African government's failure to acknowledge or address the horrific human rights abuses endured by Afrikaners and other descendants of Dutch, French, and German settlers. Trump claims South African authorities are killing white people and randomly allowing their farms to be taken from them, characterizing these alleged actions as genocide. And the big investors now, Kathy Woods, ARK ETF, published their daily trades, that's yesterday, showcasing significant moves in technology and innovation sectors. The largest trade of the day, that was a sale of 27,000 shares of Tesla Inc. through the ARK ETF, amounting to $11.3 million. This follows a trend of divestment in Tesla shares as ARK has been reducing its holdings in the company over recent days. On the buying side, ARK made a substantial purchase of Coinbase Global Inc. Coin, acquiring a total of 62,000 shares across its ARKW and ARKF ETFs for a total of $15.7 million. This marks a continuation of ARK's increasing investment in cryptocurrency exchange following significant buys in previous sessions. And FedEx Corp is planning to eliminate 856 jobs in Texas after a third-party logistics customer decided to move its business to a new location operated by a different company. The Memphis-based courier will shut down its supply chain and logistics sites in Coppell, Texas, according to a notice filed with the Texas Workforce Commission on November 21st. And we see also in Mexico now, the central bank has cut their 2025 growth forecast. They reduced it following a contraction in the third quarter that has sparked recession concerns for Latin America's second largest economy. Banxico lowered its central scenario for 2025 GDP growth to 0.3% from its previous estimate of 0.6%, according to its quarterly inflation report. Despite downward revision for the current year, the central bank maintained its growth projections of 1.1% for 2026 and 2% for 2027. All right, and that's the show today. Thank you so much for watching. Local bosses are open now, and hopefully you get that trade right. We'll give you more updates on what's playing out with the markets by 1:30 on Business Incorporated. Thank you for watching. I'm Ladi Williams. Have a profitable day.